So you're tuning in, probably looking to cut through some of the noise around tech news, especially when regulations start making waves.
Yeah, things can get confusing fast.
Exactly. And today, well, we're doing a deep dive into something pretty significant involving Nvidia, the graphics and AI chip giant.
Hmm.
They're facing a potentially major financial hit because of these new U.S. rules about shipping chips to China.
That's right. We've been looking at their latest SEC filing, which Yahoo Finance reported on,
Yeah.
and there's a really eye-popping number in there.
Okay, let's get straight to it. What's the number?
A $5.5 billion charge.
Wow. 5.5 billion.
Yeah,
Well, it's not pocket change, is it?
definitely not.
Ah.
And it signals a pretty big shift for them, I think.
Okay, so let's unpack that. What exactly is this $5.5 billion charge for?
Well, it's specifically tied to their H20 line of chips.
H20, okay.
Yeah, so it covers things like their existing commitments to buy inventory of these chips, plus some related services. And the reason for the charge, it's these new U.S. government licensing rules.
Right.
Basically, they now need a specific license to export these H20 chips to China, and, well, it seems like they're not expecting to get those licenses easily, or maybe at all for this batch.
Okay, so H20, wasn't that supposed to be their solution for the Chinese market after earlier chips got restricted? Kind of a plan B?
Precisely. Yeah, you might remember the whole thing with their A-series chips.
Vaguely, yeah. They were deemed too powerful.
Exactly. Ran into similar regulatory problems.
Yeah.
So the H20 was developed as, a compliant alternative,
Yeah.
still powerful based on their Hopper architecture, but specifically designed to be less powerful to fit within the U.S. export controls at the time.
Right, the H is for Hopper. Got it. But here's what I found really interesting in the Yahoo Finance piece.
What's that?
They pointed out the H20 isn't even NVIDIA's cutting-edge tech. They called it a nerfed version of Hopper. It's not like the big Blackwell chips or the Blackwell Ultra that's just launching.
And that's a really crucial point, actually.
Yeah.
Because it shows just how much tighter these regulations are getting.
Uh.
NVIDIA wasn't trying to slip their absolute best stuff past the goalie here. The H20 was already a compromise, a deliberately less powerful chip. The fact that even this is now getting caught up, well, it really underlines the U.S. government's push to limit China's access to advanced computing power.
Yeah, it really does. Makes you think just how important China must be as a market for NVIDIA, to even bother developing these specific, less powerful chips in the first place.
Oh, the revenue figures tell that story very clearly.
Give us the numbers.
Okay, so according to the filing data mentioned, 2023 sales to China were $5.7 billion.
Okay.
2024, it jumped to $10.3 billion.
Wow, nearly double.
And then 2025, it hit $17.1 billion.
17 billion. That's incredible growth.
It really is. That kind of trajectory, it speaks volumes about why that market matters so much to them.
So yeah, a $5.5 billion charge against that backdrop, it's not just a bump in the road. It's taking a serious bite out of expected future business.
Exactly. And just for context, China, and that includes Hong Kong, is their fourth largest market overall.
Fourth. Who are the top three?
Top three are the U.S., then Singapore, then Taiwan.
Okay, U.S., Singapore, Taiwan, then China. So losing major access there, yeah, that's going to hurt financially.
No question.
Now, something else caught my eye in the Yahoo Finance report. This mention of Singapore.
Ah, yes, the way station idea.
Exactly. NVIDIA themselves noted in the filing that Singapore, even though it's their second largest market by sales.
Which is interesting in itself.
Right. It seems to function partly as a hub. Chips get bought there and then maybe redirected somewhere else.
Yeah, and the implication there is pretty intriguing, especially for the U.S. government strategy.
How so?
Well, if a lot of chips are flowing through Singapore before potentially ending up in China or elsewhere, it kind of raises questions about how effective just restricting direct exports to China really is.
Like trying to plug one hole when the water can flow around it?
Sort of, yeah. It suggests the whole procurement and distribution network is maybe more complex, more tangled than just point A to point B.
And you mentioned Taiwan is the third largest market. That just adds another layer, doesn't it? You start wondering about other indirect routes these chips might take.
It certainly makes you think. And, this Nvidia situation doesn't happen in a vacuum.
Right.
The report also touched briefly on ASML.
Ah, the Dutch company. The ones who make the super advanced machines to make the chips, they're critical, right?
Absolutely essential. And the point was, ASML's recent orders apparently missed estimates.
Okay. So less demand for chip-making machines. How does that connect back?
Well, it could be an early signal. If you connect the dots, Maybe weaker orders for ASML gear could reflect some broader uncertainty in the semiconductor world?
Like because of these trade tensions?
Potentially.
Hmm.
These U.S.-China issues, the export rules,
Hmm.
it might be making some companies pause, maybe rethink how much they want to invest in building future chip capacity right now.
Especially if a huge market like China is becoming harder to sell advanced chips into.
Exactly. If demand for the end product, the advanced chips, is potentially crimped in a major market, that could eventually trickle back and affect demand for the machines needed to make them, hitting companies like ASML.
So it's not just Nvidia feeling the direct hit. There's this potential ripple effect through the whole supply chain.
Could be, yeah. It's all very interconnected.
So given all this, what's Nvidia's plan? Are they just pulling out of China?
Doesn't sound like it. According to the report, Jensen Huang, the CEO, he's basically said they plan to keep competing in China as long as the rules allow.
Makes sense. You don't just walk away from a $17 billion market easily.
No, you don't. They're clearly not ready to give up on it.
And the report also mentioned their upcoming earnings report. End of May, roughly.
Yeah, that's going to be one to watch very closely.
Because this $5.5 billion charge, the uncertainty about future exports, that's going to impact their forward guidance, right? Their outlook.
Absolutely. Especially, as the report noted, with this whole tariff situation kind of looming in the background, too, adding another layer of complexity to international trade for them.
It really highlights what a tightrope walk it is for these big global tech companies, doesn't it? Trying to manage the tech side and the increasingly tricky geopolitical side.
It's a very delicate balancing act, for
Yeah.
sure.
Okay, so let's quickly recap the main points here. We've got Nvidia taking a significant $5.5 billion financial hit,
Yep, linked directly to the new U.S. export curbs on their H20 chips meant for China.
which really underscores just how vital that Chinese market has become for Nvidia's recent growth spurt.
And the fact that even these specially designed, less powerful H20 chips are now getting restricted. That's a key takeaway, too.
Right. Plus, these interesting observations about Singapore as a potential hub and the mention of ASML orders may be hinting at broader industry ripples.
It all paints a picture of a semiconductor industry grappling with some major challenges driven by both technology and geopolitics.
It's a clear example of just how tangled the global tech world is and how much government rules can really shape the fortunes of even the biggest players.
Couldn't agree more.
So that leaves us, and you listening, with something to chew on. Thinking about this complex mix, the regulations, the global supply chains, the fierce tech race, what kind of long-term strategies do companies like Nvidia even have to navigate all this? What innovative approaches might they need?
That's the multi-billion-dollar question, isn't it?
It really is. And maybe more broadly, what does this whole episode tell us about where technological competition is heading on the world stage? Definitely some food for thought there.